It is Wednesday, time for Mike on the Money. Mike Giordano, financial advisor with Williams Wealth Management, is here. And Mike, this week we are talking about tax season to help you make the best use of every dollar. So, Mike, why is tax season a good time for people to strategize financially?
Well, because you're forced to get it all together, right? The hardest part about, organizing your finances and making the best use of every dollar is that it takes some discipline and some motivation to get everything together. Well, your tax professional is forcing you to get everything together. So when you put all that stuff together, now you're in a position to start thinking about what kinds of strategies you want to make, especially as you're going to talk to your tax professional or a financial advisor.
All right, so once you've compiled all of the papers, let's dig into the details. What are some ways to reduce our taxable income? And everyone wants to also get a bigger refund, of course.
Everybody wants a bigger refund, for sure. The first thing is your filing status. Obviously, if you're married, typically it makes sense to file married joint filing. But occasionally you'll have a lot of medical expenses or business expenses, and then maybe it doesn't make as much sense. You could also file for head of household if you're also taking care of, if you're single but taking care of a dependent. You want to make sure you claim all of those credits. There's a lot of child credits. There's also a premium health savings tax credit off of healthcare.gov. So a lot of people qualify for that. It's very surprising. You can qualify even in the six-figure income. You want to maximize all of your deductions. Most people are going to file standard deduction, but occasionally you're going to have a lot of charitable contributions or mortgage interest, student loan interest, and that could push you higher. And then you might want to itemize, and then you want to contribute to those IRAs or health savings accounts. Those are big.
All right, so once you've done all that, followed your advice, and gotten the check, what should we do with that check from the IRS?
Don't blow it.
Oh, don't go shopping.
No. You don't want to. Yeah, you want to. You can use a little bit of it, but let's focus on where you want to put the bulk of the money. And the bulk of the money you want to take care of that high interest debt. Certainly credit card debt, anything that's double digits interest debt. Knock out that stuff first. Also, build up your emergency savings. If you have a stable job, 3 to 4 months worth of expenses is good. If it's a more volatile job, 5 to 6 months. If you're trying to save for a down payment on a home or any other major purchase in the short term, a boat, you want to save that kind of money in cash, and then start thinking about investments, retirement, and if you want to save a little bit there to go to Walt Disney World or some favorite vacation spot, that's good too.
Treat yourself, little treat.
You got to treat yourself a little bit, absolutely.
And lastly, quickly, is this a good time then to jumpstart next year's tax planning?
Without question, because if you're thinking about, you got all of this stuff together, just like I said at the top, and you're trying to chunk a bunch of money into an IRA or a health savings account, it's better to smooth it in over time than making that big chunk. So if you already know what the strategy is going forward, then you can start working the money in month by month.
All right, great advice. Thank you so much, Mike Giordano.
I'm not trying to tell people not to have fun, though. Please don't.
Go to Disney World.
Don't shoot the messenger.
If you want to.
Go there. I'll be heading there.
Only for a few days, not a whole week.
Right.
Thanks, Mike. We'll be right back.